viewers, I'm here to share with you about the market update. The inflation in both the US and Europe has cooled, but interest rate hikes are expected to continue. The latest data shows that the US inflation cooled in May, and consumer spending increased for the fifth consecutive month. This means that the US economy remains resilient, and the Fed is considering whether resume raising interest rate at its July meeting. According to a report released by U.S. Department of Commerce on Friday, consumer spending, the main driver of economic growth, increased by 0.1% month-on-month in May. Specifically, Americans are spending on more services like healthcare and travel. The personal consumption PCE index rose 3.8% year-on-year in May, down from 4.3% in April and fell below 4% for the first time since April 2021. After excluding the volatile food and energy prices, the core PCE for the month was 4.6% year-on-year, slightly lower than the previous value of 4.7%. From a month-to-month perspective, the overall PCE index rose by 0.1% in May, in line with expectations. Fed officials have been paying particular attention to the prices, labor-intensive services. The category housing and commodities can shed a light on whether wage pressures in the labor market are passing through the consumer prices, especially against a backdrop of expected moderation in housing and commodity price increases. Consumers are seeing a decline in their standard of living, but they are still doing well, he said, raising interest rates and the end of the student debt moratorium amid the pandemic, which could affect the consumer spending in the upcoming months. So far this year, consumer spending has been strong, Mr. Powell said in a conference in Portugal on Wednesday. Looking at the data in the last quarter, economic growth was stronger than expected, the labor market was tighter than expected, and inflation was higher than expected. Thursday data shows that a number of people filing unemployment benefit fell this week, while GDP growth was adjusted to 2%. Rubella Faruqi, chief U.S. economist at High Frequency Economics, said the slowdown in both consumption and inflation is welcome news for the Fed, but the development is unlikely to make it change the near-term policy path, as policymakers firmly believe that a further increase in interest rates is needed to a more restrictive stance. In the Eurozone, the PCI in June increased by 5.5% year-on-year, lower than the previous value of 6.1% and the expected 5.6%. The core PCI rose by 5.4% year-on-year, lower than the expected 5.5%, but higher than the previous value of 5.3%. Capital economics economist Jack Allen Reynolds says the latest data would not prevent the ECB from raising interest rates by another 25 basis points at its July meeting. Specifically, the energy prices in Eurozone fell by 5.6% year-on-year in June, compared with a 1.8% drop in the previous value. Growth in food, alcohol, and tobacco prices also showed to 12.5%, while the inflation for non-energy industrial goods eased to 5.5%. Eurostat said on Friday that labor market in the Eurozone continued to tighten in May, with 57,000 fewer unemployment than the previous month, and the unemployment rate at a historical low of 6.5%. That's all I have for today. Thank you for listening. Don't forget to subscribe. See you next episode.